Hi there, welcome to kneppyinvests. Another week come and gone. Now, to be honest with you, I didn't pay much attention to what happened in the markets on Wednesday, particularly on Thursday, because I was working 12-hour shifts on those days. And in fact, I was the aviation forecaster for New South Wales, in particular, the Sydney area. And for those living in Sydney, know exactly what happened on the afternoon of Thursday, the 9th of November. There was some storms coming through late. Fortunately, that was all forecast well in advance. And when I say well in advance, I'm talking about the previous day. I put a storm on the Sydney aviation forecast the previous day. Don't talk about the public weather forecast. That is not my domain. Have a look at the aviation forecast and you'll actually have much better quality forecast. And I am paying attention to the Brisbane area right now. There are storms moving towards Brisbane as I speak at 3:37 p.m. local time, 4:37 p.m. for those who have daylight saving. So there is a possibility Brisbane might have a nice light show as we move into the evening hours. Some good storms coming through. But otherwise, this whole video is regards to what's happened on the markets in the past 5 trading days. After a really bullish run last week, particularly last 3 trading days of the week, it is interesting to see that the market is flat this week, possibly even down a little bit. So a couple of good days, but today was down 0.55%, and it was the most volatile day of the week. So generally flat week. And it's interesting to see that we're right in this red zone. So this is the shorter term moving average channel. And that's interesting that we are in a bit of a resistance area. And if you have a look at the weekly chart, you can actually see that. I'll just take away or get rid of all the clutter here. Get rid of the moving. No, we'll keep that there. We'll keep it there. If we have a look at the weekly chart, you can just see some sort of doji. I think they call it the doji, where there's not much movement at all in this particular period. In fact, the XGO was down 0.02% this week. Now, the way to look at the doji is there's not much movement during the period. So it's sort of like the fight between the bears and the bulls. And the stock market is just a fight between the bears and the bulls. Overall, the bulls win, but on occasion the bears are in control. This week, neither is in control. So it's an even contest between the bulls and the bears, which sort of makes sense. Much more bullishness in the market last week. Was it the Fed didn't raise interest rates last week? So that got the market excited, and that excitement has waned away this week. And generally, when we do look at the markets, particularly the XGO, because that's the focus right now, if anything, I'm a little bit bearish, but not overly bullish, but that's just me. And that can change from week to week. Now on to individual companies, and we will be looking at 22 individual companies. I'll look back and see how some of the companies I looked at or included in last week's video have done this week. So 3 of those companies. And the first thing I do is, before I go through this video, I go back through all the companies' charts that I included in last week's video, and I just see how they have performed in the past 5 trading days. So the first company I want to look at is Orica. And we're going to have a look at the daily chart, not the weekly chart for this one. And probably wouldn't have included this company until I saw what happened today. So there's a nice little resistance area for this company at around about 16.5 cents. And that's the highs we saw back in April and May this year, in fact. So sort of a double top. And then some good news from the company. So the share price go up last, say, few weeks or so. Share price was struggling to get above 16.5 cents. Yesterday it tried. It got up to 7.5 cents. A little bit of selling came in during the day, and that's understandable because when you see the share price get above that resistance area, you will see some selling coming in. And the main reason you see the selling is those shareholders who bought maybe back in April and May of this year and saw the opportunity to sell out. But you would think there wouldn't be many of those shareholders left. And today we may have seen a breakout in Orica's share price. Share price closed at 17 cents, so a little bit above the old resistance level, and pretty big volume coming in. Now, I wonder if that volume is consistent volume or if there was some sort of cross trade today with Orica. So we can just have a look at the course of sales. And lo and behold, at 4:13:27 p.m., 50 million shares traded, only 52.4 million shares traded overall. So this was sort of a cross trade. Not sure what P1 is. XT is a cross trade. I don't know what P1 is, but if you do want to know what P1 is, I won't show you now because I don't have the time. There is somewhere on the ASX site where they do have all the definitions of these conditions, P1, S1, all those sort of things. So I won't show you that right now. That's not the whole point of me showing or doing this video, but some sort of cross trade. Someone wanted to sell a lot of shares and someone was willing to buy a lot of shares, $8.6 million worth. That's why there was really high volume today for Ora Banda. Otherwise, I'm not that interested in this company right now, but it does seem, based on the chart, it's moving in the right direction. Now, the whole point of me doing this channel is to share ideas with you. So just because a company might not be the right company for me doesn't mean it's not the right company for you. So just sharing ideas with you. If you like the chart, if you like the name of the company, maybe do a little bit more research on Ora Banda. Pretty sure they are a gold producing company. Now, another company, a company I actually do own. In fact, the next two companies I do own, Findi, we saw a breakout last week above 66 cents. A lot of volatility in this company's share price. And we saw the share price take a bit of a hit on Friday last week and then on Monday and Tuesday this week. And really interesting, the share price moved right down to 66 cents again on the Tuesday. And after it tested 66 cents, we saw a really nice bounce in the last 3 trading days of the week. In fact, share price up 10% on the Wednesday, 5.5% on the Thursday, and another 3.9% today. And the share price closed at 79.5 cents, which means the last time the share price closed this high, you have to go all the way back to 2021. So we are talking about almost a 2-year high for this company. So possible value in Findi. Have a look at a few other videos I've done on this company. I have done a recent standalone video on Findi, but this chart does look fairly bullish. The other thing to keep an eye on, and I'll go zoom in a little bit, is the volume. Some really good volume over the past 2 or 3 weeks. And the main reason there's really good volume is because of some really good financial announcements from the company. So even though I am looking at some technicals here, the first thing that usually draws me to a company is fundamental news, particularly good fundamental news from the company. That is the main thing I'm looking for when I go through announcements, is good fundamental news. And this company has released a few over the past few weeks. Another company I own and another company that released some good financial news last week is Neuren Pharmaceuticals, a company I've held for a few years now. I have taken profits along the way, so that's something I will do. For those who don't know, haven't heard, I bought into this company the 7th of December 2021. You can see this big update. Share price almost rose 100% on that day. Some people would say, investors would say, why would you buy? The share price has risen 100% in one day. It's ridiculous. But that was a catalyst. That wasn't necessarily good financial news. It was a successful phase 3 trial. And that was a catalyst for me buying in. That was the company making announcement from the company making announcement from the company itself, because at that point in time, I considered this company to be a real company. They had succeeded in what they were trying to do. And you can see the share price close on that day at $3.25. The current share price is $14.46. So almost 2 years later. And really interesting, for some reason, let's go back to what's happening now. So last week they had a good announcement in regards to how they're not there. Well, sort of is there. They're not selling it. A debut, which is treatment for Rett syndrome, which is a nasty syndrome, mostly, if not only, affecting women or girls. And seems like the selling of that particular treatment is going really well. So that's why the share price rallied nicely last Friday, up 8.5%. There was a little bit of selling on that day. Share price went to almost a high of $14, and the share price closed at $12.25. So why was it selling last Friday? So if we go back to March of this year, you can see the share price was at these levels for a long period of time. So there were a lot of shareholders who bought at around about, or in between $13 and $14, and they saw the opportunity to get out because they considered this company a dog stock because the share price fell after they bought in. And that is mentality for a lot of investors. If the share price falls straight away after they buy in, it's automatically a dog stock, no matter the quality of the company. I wouldn't necessarily call Neuran Pharmaceuticals a high-quality company just yet, because it's trying to make its way there, and it definitely has the opportunity, potential to reach that. But anyway, I'm more interested to see what happened with Neuran Pharmaceuticals during this week. It was a good week for the company. Not only that, share price went up in the week. Let's have a look at how much it went up. It went up 18% in the week after going up 19.75% last week. And if I am to be maybe a little bit wary moving forward, is what is or where is the share price right now? So share price is at $14.46. And I have this line, and I put this line in before what happened today in Neuran Pharmaceuticals share price. And this line here is at $14.50, a resistance area, because that's what the share price or the recent highs were for this company's share price. Now, not massive volume coming in during the week, but good volume coming in. Not sure what caused the rise of 10% in the share price today. The main thing to look at when you see low volume is there was no sellers. So there was enough demand with no sellers that pushes up the share price 10%. Now, because the share price is at a resistance area, there will be some selling coming in, more than likely. But if the share price zooms past $14.15, if we see the share price get to $15, that sort of area, that would be a bullish move for Neuran Pharmaceuticals. And all those who sold out at just above $10 about 3 weeks ago, probably kicking themselves right now. Fortunately, I'm not one of those. So those are 3 companies that I did include in last week's video. Just wanted an update to how these companies are performing. And Neuran Pharmaceuticals has performed valiantly this week. My dog wants to play. I am not going to play, Milo. Sorry. I gave him a treat before this video, and he's finished, and he wants to play now. Now on to companies that released relevant news flow during the week. I'm going to start off with a company that released some news today on Friday, the 10th of October, 10th of November. We're in November now. And the share price dropped almost 40%. Yes, 40%. Company I don't follow that closely anymore. In fact, ever. The only reason I started following this company was because my nephew bought some shares in it. Now, the reason I don't really follow this company all that closely is twofold. First of all, no revenue, 0 revenue. The second reason is the debt this company has, and one of the subsidiaries has, over $150 million of debt. Now, that's a big red flag, a massive red flag for me. And it seems like it's probably a massive red flag for the market. Share price down 39.5% down. Share price down 39.5% today, the Friday, whatever it is, 10th of November. And you can see, if you look at the chart, going back to the 21st of February. Now, really interesting trading on the 21st of February. There was some news flow from the company. If I remember correctly, it might have been something to do with Tesla, an offtake agreement, something like that. And the share price opened at about 50 cents and closed at 42 cents. So even though it sounded like it was a really good announcement, it was the motivation for some shareholders to sell en masse. And that was actually the catalyst for the share price to move into a downtrend. And the share price has fallen from that high of 50 cents down to 4.9 cents. So the share price has fallen 90% in, 10 months of trading. So definitely not the company you want to be owning in your portfolio, even though it might have promise. This is definitely a story stock. It's the very fact that this company has debt, where in an interest rate rising environment and no revenue is concerning. And so what's happened today? Okay, so company was not trading through the week. The company went into a halt on the 6th, which I suppose is the Monday. And this had something to do with a credit facility for one of the subsidiaries, maybe the only subsidiary, I don't know, IM3NY. And just based off the market reaction, we already know this is going to be negative. And it is negative. So breach of covenants, the borrower was served, which is IM3NY, which is a subsidiary of Magnis. And I think they own something like 73% of IM3N. Breach, and the borrower was served with a notice of default from the lender, alleging that various events of default had occurred under and in relation to the credit facilities. The alleged events of default include about 6 items. So I'm not going to go through all these 6 items, but this is concerning. This would be concerning if I was a shareholder of this company. The other thing I did, because I don't follow this company all too well, I went back through their quarterly report, which was released on the 31st of October. I just wanted to see how this company is performing. And right now, so I didn't go through all the, so you can see they mention IM3NY a lot. So this is a very important subsidiary for Magnis. In fact, the first 3 key highlights is in regards to that subsidiary. So let's go. I don't care about the commentary. I don't care about any sort of deals they've made during the quarter. I want to see their financial state. So let's have a look at a quick financial state of Magnis Energy. No receipts of customers. First concerning thing, burning through $9.4 million in operations, including almost $5 million just in interest and other costs of finance paid. That's significant. That would be a massive red flag if I was actually looking at this company at the time they released this Appendix 4C. Cash flows from financing activities, it's quite busy here. So proceeds of issues of equity securities, $8.5 million. So that's like capital raisings and stuff like that. Proceeds of borrowings, $2.1 million. Repayment of borrowings, $4.6. So it seems like the debt went down a little bit. Transaction costs related to loans and borrowings, $4.7 million. I'm not sure what that is. Now, they did have $14.9 million cash at the end of this particular quarter, but this is the big red flag for me. And this is how I know they have $150 million of debt. Total financing facilities, $156.8 million. Unused financing facilities available at the end of quarter, $45,000. And they go through the particulars of their debt. And this is in relation to this loan facility, $100 million loan facility. So Magnis majority owned subsidiary Imperium 3 New York, IM3NY, has a $100 million loan facility, US loan facility with ACP Post Oak Credit. The terms of this facility include, looking at the interest rates, well, it's really complicated, so I'm not going to go through all this. In fact, they're secured overnight finance. We'll go through it now. Secured overnight financing rate, SOFR, that has a floor of 1% at a 6% margin, and credit insurance wrap premium, which in year 1 is 8.25%, year 2 4.6%, or 2.5% if milestone achieved, and year 3 4.35%, or 2.25% if further milestone achieved. Fairly complicated. And I also had to have a look at the mood on hot copper. Right here it is. The mood on hot copper, it was really negative. Now, a lot of that negativity was from non-owners, but I wanted to see if there was any positives from owners, and I did not find any positive posts from owners. So I very rarely go to hot copper, but sometimes I like to see the mood, because I know Magnis is a fairly popular company on that website. But overall, I don't really like hot copper. I like to draw my own opinion. Sometimes I do like to find some opinions of people, particularly if there's not many posts on a company. If there's like 1 post a week or 2 posts a week, generally on a company, that's probably good. I don't know what I want to say here. If there's a lot of posts on companies, there might be too much hype in that company. So there's not a lot of posts on a company. That's a good, what's a word? Sometimes I just forget words. That's a good, I'm going to say idea. I keep wanting to say idea, but that's a good possibility that there's not a lot of hype built into that company's share price and valuation. Anyway, we eventually got there in the end. For some reason, I just wanted to say idea, but it's not really idea. Westpac did release results during the week. And on first glance, the results were quite good. Everything was up, which is good. So a lot of information they released on the 6th of November. Lots of info. They released about 20 bits of information. The main thing I want to look at is market-sensitive announcements. So 4-year results emailed to shareholders. I'm typically looking just for the media release. So this is only 7 pages long. I'm not that interested in the banks. Financial highlights. So profit up 26%. Loans up 5%. Total dividend 142 cents or $1.42, up 14%. CET1 capital ratio up 109 basis points. Return on equity 10.1%. So that's right above what I'm looking for in a company. So maybe I should take a closer look at a Westpac. I also had a look at some of the commentary from the CEO, and they were actually quite bullish, which sort of was interesting. I don't know if I can find that CEO, that commentary, but the CEO and the management of the company was quite bullish. So how did the share price go? Well, on the day, the share price, the chart looks pretty good. So the share price on the particular day rose a fair bit. The 6th, yeah, the 6th. Says it was down. It was not down, TradingView. So for some reason, yeah, TradingView's was weird the end of last week. So no, it says it's up. Sorry, I was looking at the share price movement today and thinking there was a share price movement on the 6th, but I was looking in the wrong spot. So I was up 2% on the day, but we did see a bit of selling. How do we know there was selling? So if you look at the one-day candlestick, you can see there was a long tail above the main body. So the share price at one point in the day got as high as $22.31 or 32 cents, $22.33, but it closed at $21.92. So there's a little bit of selling during the day. The reason why they were selling was pretty obvious. Go back just to August, and there would have been a lot of shareholders, not only August, but also back to May, a lot of shareholders who bought in this area, and because they became break even, they thought, let's sell. I can get out of Westpac, break even instead of at a loss. The reason why they're thinking that way is because as soon as they bought in, the share price fell. So it's all psychology. It's all psychology. Short-term movement of share prices is all psychology. Even intraday movement of share prices is all psychology. And look what happened to the share price after that. Share price has fallen all the way back down below to where the share price was before they released their results. And that's just negative sentiment in the company because the share price is in a downtrend. And these results were not enough to shift the sentiment and change a trend in the share price. Weebit Nano. I'm pretty sure this announcement was in regards to first revenue. Weebit Nano receives first revenue. How much was this revenue? Let's have a look. You know, just by the title of the announcement, that the market was going to be excited. So as for some reason, it's taking CommSec a long time to open this announcement. And we can see on the 6th of November, share price rallied. Well, that's the wrong company. Share price rallied. Ooh, have I lost internet? And we're back. Maybe it was, I have no idea. I have fiber to the premises, so it should be really, really, really quick. Typically, it is quick. I can download stuff instantly almost. It seems like that. Anyway, so how much was this first revenue? While this initial licensing fee is relatively small, $100,000, the company considers the fact that Weebit Nano is no longer pre-revenue to be material, as it marks Weebit Nano's transition to commercialization. There is some element of truth to that. So this could be one inflection point for the company, that they are now a real company selling something. And that's probably a good way to look at Weebit Nano. Did the market like it? So, yeah, sort of. But the problem with Weebit Nano, you can see a lot of hype was built into this company. And lo and behold, even though my connection came back on, for some reason, Zoom decided it wanted to stop my recording. And some funny things happened. So I had to wait for about 5 minutes before I could start recording again. So what was I talking about when it comes to Weebit Nano? I think I was talking about how there was a fair bit of hype in this company in the first half of 2023. We saw the share price get as high as $9. Now the share price is $4.13. So a lot of shareholders, particularly those with a lower conviction around this company who had bought at higher prices, want to sell out. And that's a very important point, which I don't think I've mentioned before. It all comes back to an individual investor's conviction in regards to a company. So a lot of people probably would have bought in Weebit Nano just because the share price was rising, and there was a lot of hype in this company. And then because the share price has dropped a fair bit, those sort of shareholders want to get out, and they're looking for an opportunity to get out. And whenever they see some good news from this company and the share price rally, that is the opportunity for those shareholders to get out. That is resistance. And that is a problem Weebit Nano is going to have unless they release absolutely stellar financial news over the next few months. The other thing that could happen is the share price just goes sideways from here. And when the share price goes sideways, all those shareholders who bought at higher prices in the first half of this year become bored, and eventually they will sell out of their Weebit Nano shares because they will find the next big thing, the next hyped up company, and that would be beneficial for Weebit Nano. And that is one of the things I do look for, is a breakout after a long consolidation period. Of course, Weebit Nano is a long way from that, if it's ever going to happen for this company. So I suppose that's all I'm going to talk about in regards to Weebit Nano. Now on to a company I've had owned in the past, haven't owned for a long time, and that is Whispir. And I'll just decrease the size of my head there. And there is a takeover bid for Whispir. Share price for this company, this is I suppose a premium to the the previous share price, because the share price rallied 61.7%. from 30 cents to 48.5 cents. I would say, even though I'm not the biggest fan of this company, it's very much an opportunistic takeover because the share price has dropped a lot. You can see the share price dropping a lot. Oh, look at that. Oh, geez. Share price dropped from a high of $5.20 back in July 2020 to 48.5 cents. So it's dropped by more than 90% over the last 3 and a bit years. And whoever's taking or wants to take over this company, intention to make a takeover bid, here it is. And so what's the share price now? It's 48.5 cents. You'd probably say the takeover bid is about 52 cents or so, low 50s or something. The share price is, the takeover bid is at 48 cents. That's, if I was holding this company, I'd probably sell straight away. So 48 cents. It's very rarely you'll see the share price of a company go above the takeover bid. So obviously what's happening now is there are some people, some investors who think this takeover bid, looks like, they're buying on the company who's taken it over, whoever it is. Soprano DTA has put in 48 cents, 70 million shares. And that's probably, if you look at the orders, 50 million shares. And that's probably Soprano just gobbling up shares. That's probably why the share price is 48.5 cents. I've seen that before, in fact. I wonder if that's what they're doing. It could be what they're doing. Was this a shareholder before? Should go through this. Okay, Soprano DTA currently owns 15%. I would say they are buying shares at 48 cents. So that's why the share price is now higher than the takeover bid, because they are buying en masse at 48 cents. So good news for Whispir shareholders, possibly good news, because if you bought 3 years ago, you are 90% down, and you might be thinking this is an opportunistic takeover bid well below fair value for this company, particularly because the share price has dropped. It did look at the share price maybe had reached a bottom, maybe, just a maybe, but definitely looked like the share price downtrend had come to an end, or potentially was coming to an end for Whispir. So definitely a really good takeover bid for this company. Well, maybe a good takeover bid for this company, because the last time I looked, Whispir was still not operating cash flow and free cash flow positive. However, maybe it was trending in that direction. Whispir. Now, I did do a standalone video on AML3D, because this company does look interesting. And because I did a standalone video on this company, I do follow a little bit more closely. And the company did release a contract during the week. So the company wins a $2.5 million contract, which may not seem a lot. And I don't know exactly the particulars of this contract, but when you look at the last Appendix 4C, they had $2.4 million in receipts in the last quarter, but were operating cash flow positive. And this particular contract is for $2.5 million. Does it say time period at all? 50% upfront payment, so $1.25 million upfront. The company expects final commissioning will occur in mid-calendar 2024. So over the next year, they should receive $2.5 million. So an okay announcement. I'm not the biggest fan of contracts. I do like to see the numbers improving in the financial statements, because we don't know what sort of margins this is at. Maybe it's not much. Margins might be really small. I don't know that at this point in time. So I won't react to contract information or news flow from a company, but because AML3D only has a market cap of $18 million, potentially this is a good announcement from the company. And the share price did rise 17.4% on the day and has continued to rise. Even though the share price was in a long-term downtrend, potentially this downtrend has come to an end for this company. So definitely a company to keep on your watch list if you're interested in these really small companies that have potential to become profitable for the long term and grow for the long term. And they're also in the right space, 3D printing. Even though that was a hype area a few years ago, maybe there's some validity to that sector. NZM, which is New Zealand Me, NZME, I don't know how to pronounce that. This company actually released a trading update during the week, or something like that. Updates financial year 23 guidance. There was some, I suppose, some negativity to it, some positivity to it. As for instance, that the first sentence notes, the company notes, the economic environment over the past year has been challenging, but they also mentioned the second half has seen improvement in business confidence, but this is not yet consistently reflected in advertising revenue results. So some negativity there, some positivity there, but current guidance for this company, EBITDA guidance, again, I'm not the biggest fan of EBITDA because we don't know the depreciation, amortization, possibly even the interest. 57 or between 57 and 59 million. This company has a market cap of 153 million. So possibly price earnings ratio 9.8. So possibly cheap, but when you look at the long-term chart for this company, it's in a downtrend. It's been in a downtrend for the last 18 months or so. Let's have a look at the long-term chart here. It's been as high as $1.64 back in March of 2022 after a beautiful uptrend in the share price. So possibly a company to put on the watch list, because if things are starting to turn around in what they do, maybe it's cheap. Now to a company that have released two announcements that did cause a little bit of interest. Imugene. So on the 6th of, actually zoom in, which I probably should have done. On the 6th of November, phase 1, CF33 Vaccinia study update, positive early signals. And then, as I said, its major milestone in phase 1B CAR T trial. So this is the sort of company we hope succeeds in what they're doing, because they're doing stuff with the treatment of cancer, if I remember correctly. So gastrointestinal cancer, colorectal cancer, 2 bile duct and 1 pancreatic and 1 liver cancer showed positive treatment effects with a disease control rate of 86%. I won't talk about the second announcement, but a lot of interest in this company during the week. Just let's have a look at the chart. Share price down 4.55% today. However, at one point today, the share price, I think, was up about 20 to 30%. Let's have a look at the chart. Look at that. Massive volume coming. Look at the volume, huge volume coming in. Share price has increased from 4 cents at the start of the month all the way to current share price of 10.5 cents. Share price at one point today got to as high as 15 cents. And this is after share price kept on rising, rose in 5 consecutive days. This is the first sign of some selling. And we can definitely see the selling once we look at the 3-minute chart. When was a high today? The high was on open. So the amateurs opened the market. The amateurs got really excited because what's happened in the last few days, they bought en masse. Share price rose from about 10.5 cents or 10 cents, whatever it was. No, 11 cents at the end of trading yesterday, up to 15 cents. So we're talking about 30% rise, or even more than that, in the share price. And selling came in almost automatically straight away, and the share price fell. In fact, 4.55% today. So possibly this is the end of the massive rise in Imugene's share price. Remains to be seen. Maybe this was the only selling. Maybe the only selling we're going to see in this company was today. But really, market 580 million. Shares on float 6.12 billion. Wow, I did not realize this company is, has a massive valuation. Let's have a look at the weekly chart for this company. So it's been massively higher. Wow, 62 cents back in late 2021. more than likely they've done some capital raisings. You would think they have done some capital raisings, because if they haven't, back then the market cap of this company would have been about $3.5 billion. So obviously the market likes this company, and maybe this was a good announcement. Maybe it was a better announcement than I'm thinking, just based off the market reaction. But a little bit of selling coming in today. Maybe that's a little bit of a concern for those short-term traders of Imugene. Next company is Platinum Management. Well, I'm not even sure why I'm looking at this. So this is one of those fund managers, and fund managers always release these funds under management every single month. You've Magellan, Platinum Asset Management, all those release funds under management. And what I'm looking for all these companies that are seeing their funds under management decline is I want to see a stop, an end to the decline in funds under management. And Platinum Management still seeing their funds under management decline. It's an ugly looking chart. The end in the downtrend to the share price is not in sight. It was looking like it might have been in sight because the share price was struggling to get below this resistance or support level at $1.59. You can see the share price going sideways, and every time it got to about $1.59, we saw the share price rally until the 24th of August, when the share price fell through on strength, high volume. That would have been the results, and the share price took a massive nosedive after that. So it says a dividend yield of 11.97%, but the market is saying that the shares or the profit from this company is going to decrease, and the dividends from this company will decrease, because if it don't, that's a nice dividend yield for a company. So that's what the market is saying. Don't be fooled by the dividend yield. Probably don't be fooled by the P ratio, which is 8.52. There's a reason it's low. So yeah, ugly looking chart for Platinum Management. James Hardie released first quarter results, some sort of quarter results. Second quarter results. Now, I won't go through this necessarily because I am trading this, and I probably should have sold out. The market liked it. Share price rallied on the day 13.8%, and you can see the share price has been between $45 and $48 the last 3 trading days, and $48 is fairly significant. I probably should have sold out $48, to be honest with you, but I was working that day. I would have definitely thought about selling out, but I was working on the Thursday, and the share price got to $48. Why is that significant? Look at what the share price did on the 9th of August, got to $48 and fell. So that's a very natural resistance level for this company, and the share price now at $45.61. Now, because I am trading this company, I did have a look at the announcement, and on first glance, I was sort of negative. I thought it was, I'm not going to open this announcement. It's 71 pages long. But at first glance, I was not enthralled by what I saw. But obviously, my thoughts were wrong because the share price rallied 13% on the day. So there might have been some other information in there that I didn't have a look at, because that was on the Wednesday and I was working that day. So I had a very quick look at it. So maybe there was more information that I have not seen that caused the market to be a little bit bullish when it comes to James Hardie. So sometimes it's good just to wait to see how the market reacts before you take action on buying or selling a company's shares, because we have seen some interesting reactions. You'll be able to see this interesting action when we look at Xero later in the video. Another company that I have not done any research on, a company called Shape Australia. Every time I see this company, I just think of there's a milk called Shape. It's zero fat milk. I hate it. And I always just think of milk when I see this company's name, but I've done no research on Shape. They released a trading update on the 8th of November, which is the Wednesday, yeah. And it seemed pretty good. I mean, it looked pretty good. Nothing to complain about. So it's Shape Australia is a leading national fit-out and construction services specialist. So not probably the best sector. So fairly low margins in this sector, and that's one of the reasons why I haven't looked at it. Second reason why I hadn't looked at it is the chart has been quite negative. This company listed on the ASX not long ago, about 2 years ago, and the share price has decreased since then. But it does look like potentially the end in the share price downtrend is or has come. The downtrend in the share price has come to an end. Share price was as low as $1.36 back in June. So maybe the negative sentiment in this company has turned around and is slightly positive on the back of this rally in the share price. Well, not much of a rally. Market cap of this company is about 137 million. They are profitable. And when I say low margins, so this company made $856.9 million of revenue, but only $10 million of profit in financial year 23. And the previous year, before that, $656 million in revenue, profit of $7.2 million. Massively low margins. It's one of the reasons why I would never say this is a high quality company, because one thing goes wrong, their profit margins are wiped out and they are loss making. Now to an American-based company, Datadog. I have no idea what this company does, but I thought I'd just include it. It's listed on the NASDAQ. Share price on the 7th of November shot up 28.5%. Share price had been a downtrend. Nice little rally in the share price. So more than likely, based off this rally in the share price from May through to August, this company has something to do with AI. And then that sort of hype in AI fell away a little bit. But then the company released some interesting results. Share price rallied. They would have released their quarter results. So let's have a look at a news article from CNBC. Datadog stock surges 28% for its best day ever after cloud company beats estimates, lifts guidance. Two very important things there. It beat estimates, so it beat expectations. That's the first reason why the share price rallied. And then the company decided to lift their guidance. So this was a profit upgrade. I'm pretty sure this company is profitable. So revenue of 547.5 million. So it's not a small company. This is quarterly revenue, not full year revenue, up 25% year over year. And earnings per share came out at 45 cents, better than 34 cents expected. So this company is profitable. And markup, well, $32.6 billion markup. So you want to be profitable if you have that markup. A massive increase, beautiful increase in revenue from 198 million to 1.7 billion over the last 5 years. Now, according to TradingView, they were not profitable in the past year. Look at the quarterly data. Loss making each quarter. So yeah, it said earnings per share was positive, but according to TradingView, they were loss making. Anyway, I don't know anything about Datadog. Shares of cloud monitoring software firm. So it seems like they're in the right space, sort of. I'd like to see them profitable, operating cash flow positive, that sort of thing. And I will do some research on Datadog in the future. Brainchip. Now, Brainchip had an interesting day this week. So let's have a look at Brainchip's chart. So if you look at the long-term chart, downtrend, well-defined downtrend. On occasion, you'll see these little rallies in the downtrend, like we saw in January, late December, January this year. Share price went up 12% and then 11.5%. Nice little rally in May. And we saw a nice little rally in the company's share price on the 8th of November. Share price went up 39% on no news. And what happens on pretty big volume? So what happens when a share price rallies 39% on pretty good volume on no news? They receive an ASX price query. Can you explain why the share price rose 39% on high volume on no news flow from the company? And more than likely, the company is going to say, no, we don't know why, and not applicable, no confirmed. So no interesting information in their reply to the ASX, and the share price has tumbled a little bit over the last 2 days, down 16% on the Thursday and flat on the Friday. Is this the end to Brainchip share price? Unconfirmed at this point in time. Market cap is still 442 million. This company still has, FA revenue. And when I say FA revenue, let's have a look at the Appendix 4C. Let's have a look at receipts. $27,000 of receipts in the current quarter, $895,000 of receipts in the first 9 months. Still burning through a lot of cash. So still not interested in Brainchip at this point in time because the chart looks ugly and the company is not making any money. Xero, a company I own. So even companies I own have bad days. So Xero released their half-year results. And share price dropped 12.4%, has dropped another 0.5% today, and now is down below $100. So let's have a look at Xero. And this is one of those companies where there was really interesting trading. And if you bought on open on the Thursday, you are down big because the share price of this company actually opened up on Thursday after they released their results. And you can see this massive red one-day candlestick. And that means a lot of selling came in during the day, and the share price has fallen below $100. So main reason I bought this company is they were turning things around in terms of they now are profitable, cash flow positive, that sort of thing. And I've not had a close look at these results, but I would say, based off the reaction, and I had a very, very quick look, so a very fleeting look at the market release. Everything was up big. So revenue up 21%, subscribers up 13%, net subscriber additions down 9%, but that's additions. So net subscribers are still going up, but the increase or the rate of increase in subscribers is decreasing. Now, I would say possibly, without knowing, one of the reasons why there might be some negative reaction from the market could be what's happening in the US. So I'll go through this a bit in more detail later on when I have a little bit more time, but I'll be interested to see what's happening in the US. I can't see, could be the, you need to look at the presentation for this. So let's have a look at the presentation. Take a while for me to open up. But anyway, let's have a look at the 3-minute chart for Xero. You'll be able to see that on open, the share price, in fact, we'll have a look at the 1-minute chart because the selling occurred in the first 3 minutes. So let's have a look at the 1-minute chart. Share price opened up at $116.40 and almost went to $100. Did it? Yeah, it actually did go below $100 during the day. So the selling came in within the first few minutes, which is interesting. A lot of times when you see a really negative announcement from a company, share price will open 20, 30% down. This actually opened up. So again, amateurs opened the market. Professionals came in and said, well, share price had opened up. I'm going to sell en masse. And within 5 minutes, the share price was down big. And that just turned the sentiment in this company from positive right on open to negative. Very quickly can the sentiment change. Sometimes I do wait 10 minutes after a share price has started trading or the shares have started trading for a company just to see what the initial reaction from a company or for announcement is. I don't look at the share price on open, right on open, then go away. I will stay around for about 10 minutes just because of this exact same thing. And on the flip side, sometimes you'll see the share price down maybe 6 or 7%, and the share price rallies significantly after that. So don't be suckered in the first few minutes when the share price opens up big or down. Sometimes the share price will keep on rallying, and sometimes the share price will keep on falling. So who knows which way? Oh, I was going to look at the presentation. That's right. So I would say, without looking or without knowing, that, and I have no idea if they put the US numbers anywhere here. They should. They've got ANZ. So let's have a look. So I mean, everything. I liked what I saw in the announcement. Everything seemed fine. US review. I don't see any numbers at all with US review. Okay, here we go. North America. International group. So North America is the... So North American subscribers up. It's still up. 384,000 to 396,000. I think the markets just saw the decrease in the growth in North American subscribers because the previous quarter subscribers grew by 30,000. This quarter was only 12,000. But then even if you look at the United Kingdom subscribers, that was down a little bit as well. New Zealand subscribers, the rate of change, not down, but the rate of change in subscribers is down. Still nice increase in subscribers in Australia. That is still by far their largest market. And even rest of world subscribers, the rate of change, it's about the same, I'd say. So really, it's probably or might be because of the rate of change in subscribers is down, but I would not really focus on that if I was a shareholder, because it could be just one quarter, and maybe next quarter we see an acceleration back up in subscriber numbers. Anyway, next company is Orica. We go back to daily chart, and Orica released their half-year results, or maybe full-year results. Yeah, full-year results. So there we go. Full-year results. I had a very quick look at these results. So whenever a company releases results, even if I'm busy, I will have a very quick look. These results, on first glance, looked really good. A profit after tax of 295 million, up from 60 million. Underlying EBITDA up 24%. Underlying earnings per share up 4.8 cents from previous corresponding period. Final dividend 25 cents. Return on NA, return on net assets on continuing operations. That's a weird one. I haven't seen that before. So it seemed good, but how did the market react? Let's have a look. I don't know. Yeah, I haven't actually paid attention. Oh, the market reacted okay. Share price up 2.8%. But look where the share price is right now compared to what it has been in the last year. Share price of this company is just going sideways. Just going sideways. No, not interested in this company at all. Markup 6.9 billion. Dividend yield 2.8%. Price earnings ratio 24. So to be fair with you, not interested in Orica. If I saw, so the way I would get interested in Orica is if I saw the share price on the release of these results go above $17 on really good volume. Why $17? Well, because that's the recent highs in the share price. I'll be still worried about, although this is the weekly chart, so the highs in the share price go all the way back to May 2022. So if you look at the daily chart, just zoom out a little bit. Yeah, it's a pretty strong resistance area. So between about $17, $17. So no interest in this company just based off this chart at all. Avita Medical also released some results today. Avita Medical, you can see the share price rising 16.7%. So the market must have loved it. Third quarter results. Now, even though the market loved it, again, I had a quick look at this. I have Avita Medical on my watch list. Nice growth in revenue. Commercial revenue 13.5 million, up 51% compared to the previous corresponding period. Gross margin 84.5%. That's nice. But when you look at the financial statements, equity down big, about 22 million. And not only that, if we look at the losses of the quarter, so the 3 months or the quarter losses at 8.7 million. So this company still has a long way before it becomes profitable, but who knows when that's going to be? I have no idea. And you can just see by the chart, the market just doesn't know about this company. It just looks good, looks bad. The delay in FDA caused the share price to decrease 20% on the 3rd of October. Share price was in a beautiful uptrend. The CEO said something really bullish at the start of the year. That's why the share price took off. The market cap of this company is $411 million. Will they have to do another capital raising? I don't know. How much cash do they have? Let's have a look at the assets. Cash on hand. Well, it looks like they've done a capital raising because they have $50.8 million on cash on hand, so enough cash. I just want to see this company hit that very important inflection point of becoming operating cash flow, free cash flow positive, and profitable. Still a little bit of way off from that. They do expect FDA real-time review of the PMA supplement of Resell Go to resume on March 1st, 2024. So still a long way away, but who knows? That could be the catalyst for the re-rating in this company's share price, because if they can sell this as Resell Go into America, maybe the revenue and receipts will absolutely take off, because that's sort of the market most pharmaceutical companies aim to gain attraction in. TG1. Who's heard of this company? TG1. Techgen Metals. I've never heard of this company. The share price rallied 140.7% today on expiration update. I had a look at this. They went, what caused all the excitement? I have no idea. But the market liked it. But when you look at the one-day candlestick, what do you see here? Share price at one point today was 13 cents. It's now 6.5 cents. So if you bought at the high, you're already 50% down if you do not sell during the day. Why? Was it selling during the day? Let's have a look at the 1 minute chart just to see. Actually, we'll have a look at the 3 minute chart just to see when the selling happened. Oh, gee, look at that chart. The high in the share price was at 2 p.m. Yes, 2 p.m. The excitement of this company did not begin straight away. This is just day traders getting way too excited. Way too excited, because at the end of close trading yesterday, the share price, well, there's very little trading yesterday. Very little trading. So the share price closed, you can see that in the 1 day candlestick. So share price closed yesterday at 2.7 cents and opened today at 3.3 cents. So there was the share price did open up about, we'll say that's almost 20% on open. But if you just have a look at the 3 minute chart, it was just insanity in this company. And whenever you see the share price exponentially rise like this, there is going to be problems in the future. The share price will take a massive tumble. For this company, it happened in all 1 day. In fact, the last 2 hours of trading, the share price fell 50%. Now, I don't care what the announcement is. I'm not going to even look at it right now because I can't see any positives out of it. Now, probably is some positives there, but it just seems like this company was a trade thing for day traders today. Markup $2 million. So now it's about almost $5 million because share price has increased 140.7%. So who knows? Maybe there is something positive, but it just looks like, just based off the intraday trading, that this was just a plaything for day traders. Damstra. Now, so in the past, I've talked that whenever a company I own is under a takeover offer, I will sell almost immediately for the company, or immediately sell the shares I have in that company. Damstra is one occasion where I did not sell because my holding in that company is fairly small. It's a small token holding. And the main reason is because this company is, I think it's, if we look at the quarter Appendix 4C, and I think this was an opportunistic takeover bid, just like Whispir. This company was, if I remember correctly, and you can just see how much attention I pay to even companies I own sometimes, this company was operating cash flow positive and free cash flow positive. And then we saw a takeover bid for this company. So obviously, again, this company is fairly cheap in my opinion. It says 60.2 million. That's after trading yesterday. But what happened today? Why did the share price drop 25.5%? So they did release an update on potential control transactions. Now, this potential takeover bid was at a price of 30 cents. Got to wait for it to open up. And the company that wanted, or the institutional fund or PE, and lo and behold, I was kicked out again. I think I was kicked out by Zoom because my recording went over 40 minutes. And it seems like now Zoom has put in a time limit, 40-minute time limit. Because I tried to go back in, it says, no, you have to wait another 5 minutes because your free time with Zoom has expired. So that must be a new thing that Zoom has introduced, which means most of my recordings can't last any longer than 40 minutes. And if they go over 40 minutes, I'm going to have to do 2 recordings. So I was mentioning that this is a reason why you can see share price dropping a lot, 25.5% down to 17.5 cents, from when I could have sold out at about 25 cents. And this is the reason why I typically sell out when I see a takeover bid for my company, because not all the time, but a lot of times you will see a takeover bid fail, and then the share price will drop. We saw that with Energy One. I sold out of Energy One and I bought back in at significantly lower price sets. Now, it doesn't mean this next takeover bid won't go through, but I think the market is a little bit skeptical. Now on to APM. So this is some sort of recruitment company, APM Human Services International. Share price dropped 20.7% today on the 10th of November. I was a little bit surprised by this. They had the AGM, so obviously they gave a trading update, and it was a negative trading update, without doubt. So let's have a look at the trading update, see if there is, in fact, a trading update. And I have not had a look at this yet. So we're all looking at this at exactly the same time. Typically, trading updates right at the end. Nothing. Obviously, I might have missed it. It could have been somewhere in there, but I might have just missed it. So obviously the market didn't like something at all with APM, what they call APM Human Services. And look at the chart. So I was sort of not interested in this company, but I did put this company onto my watch list because possibly there was a shift in sentiment of this company. Now, the reason why I wasn't overly excited is because you can see the share price was right at those old highs we saw back in May and June. And funnily enough, there was a little bit of resistance, not a lot. Share price was going sideways. But then the company had the AGM, and look at that one-day candlestick again. All the selling occurred during the day, not at open. When was the AGM results released? Well, the AGM chair and CEO announcement was at 12:49 p.m., so it was halfway through the day. So it's understandable to have this kind of candlestick. So let's have a look at the 3-minute chart, and more than likely we'll see a lot of selling coming in at around about 1 p.m. because as soon as a company releases a market-sensitive announcement during trading, the shares are put in suspension for about 10 minutes or halted for about 10 minutes. Maybe it's slightly different than 10 minutes, but let's have a look at the 3-minute chart. You'll be able to see at about 1 p.m., the share price just dropped. And there it is at exactly, well, it says 12 p.m. here, but that's local time. But it's 1 p.m. Daylight saving time. So this is my local time, 12 p.m. That would have been 12 p.m. for me. And look at the share price. It just dropped. So something happened in the AGM or at the AGM, maybe not at the AGM, but when the market saw this particular announcement, what was it called? The AGM chair and CEO announcement, it didn't like something and the share price plummeted 20%. And in fact, the share price hit a low at 1:03 p.m. or 2:03 p.m. So 1 hour after the company released the announcement, that was a share price low. Maybe the bottom has been reached, but unfortunately, the slightly bullishness of the chart has turned back negative. Now, on the flip side, I put this line here suggesting a bit of resistance. You could do it likewise at the bottom. So if you draw a line there, and the share price did rally in that final 2 hours of trading. And the reason why it rallied, well, the share price hit a low back in August around these levels. So there we have a trading range. Share price of this company has been in this range since June. Not a long range. Wouldn't say it's necessarily a strong range, but if we see the share price bounce, go back up to $2.21, that sort of area, and then go back down, we can say with more confidence the share price of this company is now range bounding. Possibly that's what's happened. Possibly that's why there was a little bit of buying coming in at $1.75. Anyway, and the last company I want to look at and talk about is Pointerra. This is sort of an update because I don't think this company released any news flow through the day, but share price down 10% today. And I just thought, yeah, let's do a bit of an update with Pointerra. No announcements during the day. Someone did have a go of me when I did a standalone Pointerra video the other day or last week, wherever it was, maybe 2 weeks ago, because I didn't point out all the positives in regards to this announcement, all the the partnerships, that sort of thing they were making with other companies, that sort of thing. That's irrelevant because I had a look at all that information. There's no mention of any financials or anything like that. It's vague, wishy-washy. The market doesn't care about that sort of thing. The market only cares about one thing, and that is numbers. That's why the share price of Pointerra has dropped a lot. And that's why I didn't mention partnerships in that particular video. It's irrelevant for this company right now. We don't know if those partnerships are going to cause any financial benefit to Pointerra in the medium, long term. I'm not talking about short term, I'm talking about medium and long term. We just don't know about that just yet. And for some reason, share price has dropped 10.2% today after share price going sideways after that big drop of 36.6%. This is an extremely bearish chart. In fact, the sentiment in this company just keeps getting worse and worse. Markup of this company could be less or lower than $40 million right now. So hopefully this little section has not gone longer than 40 minutes, probably only gone for 5 minutes or so. If you have any questions about any company I've mentioned in today's video, just leave those thoughts in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.